Hello, friends. Welcome to OAVA's weekly update on money and economy. We begin with update on the global front with the actions of two key central banks, the ECB, that is the European Central Bank, and the BOE, that is the Bank of England. Both held a pause on key rates at 4% and 5.25% respectively. This was after the Federal Reserve also kept a pause on key rates earlier. The ECB sounded a note of caution saying inflation can pick up again in the near term to allay market over-optimism of expected rate cuts anytime soon. Meanwhile, in the UK, inflation is higher than in the Eurozone or US, and thus there are no near-term expectations of rate cuts as its targeted inflation rate of 2% is still far away from the current CPI inflation levels of 4.6%. Moving on to news on the domestic economy, India is expected to top remittance inflows in 2023 with a 12.4% increase in inflows to 125 billion USD according to data released by the World Bank. Declining inflation, strong labor markets in the high-income source countries like US, UK and Singapore are among the contributing factors. It is expected that remittance outlook for 2024 will remain strong with growth expected to moderate to 8%, taking remittance levels to 135 billion USD according to the World Bank. Moving on to news on the mutual fund industry, the taxation changes on debt funds made in the last union budget has prompted mutual funds to pitch and market hybrid schemes like equity savings funds, balanced advantage funds, and multi-asset allocation funds, which, while having a debt component, is relatively more favorably taxed than debt-oriented mutual funds. In the financial year 2024 so far, as per news reports, equity savings schemes has raked in inflows of Rs 6,000 crore compared to outflow of Rs 1,100 crore in FY23. This has led to a surge of 50% in assets under management of equity savings funds during the period April to November 2023 to Rs 24,100 crore. That apart, about 6 multi-cap asset allocation funds were launched in 2023, garnering in excess of Rs 6,000 crores. Moving on to news on cryptocurrencies, the IMF chief recently made a statement that India tops the crypto adoption index globally as per a report released by Chain Analysis. Leading cryptocurrencies like Bitcoin and Ethereum have made a strong comeback in 2023, delivering supernormal returns, and that could partially explain the interest. She sounded caution though, as high crypto asset adoption could undermine macro-financial stability and monetary policy transmission, something the RBI too has always been deeply concerned about when it comes to crypto assets. India did a fair bit to discourage crypto trading, including imposing 30% tax and requirements for tedious collection. But this simply moves much of the trading activity abroad to centers like Dubai, which don't have such rules. This is why one of the recommendations by IMF in a paper it released in September mentioned that it's vital to coordinate policies globally to avoid regulatory arbitrage, although they do not advocate a blanket ban on crypto. That's it for this week from us. Please click like, share if you found the content useful, and do visit our website www.oava.in for information on our courses. See you next week.